Welcome to Option Trades today from the BAT Studios. It's April 9th, 2024. Let's see what the market's doing. E-mini S&Ps down 24 handles off of their lows. You can see here the low 52.08. They're trading 52.30, so they're about 22 handles off of their lows, but they're certainly off of their highs by about 34 handles. That puts them mid-range for the day. E-mini S&Ps down around 23, NASDAQ down around 45, Russell down around $1.10, Russell the strongest of the group, and the E-mini S&Ps the weakest of the group, followed by the Dow, which is down 230. Volatility up by 20 cents, and the bonds up 29 ticks. Bonds continue to rally, taking back the slide over the last couple of days. Now, you know I love to go to my high option volume list, but you know also that earnings are looming here. When I click on this earnings, you'll see that just about every stock that we trade has earnings looming. I like to avoid earnings when I'm looking at a trade, so it takes away these stocks that have a relatively high implied volatility, like you have here in Apple and Coin and Shop and Qualcomm, because they all have earnings. I want to avoid that. So when I click on this, I go from oldest, meaning 520 something past expiration, to the closest. And one of those stocks, Costco, came on my radar. Costco volatility up around 1.5% over the last 5 days, and the IV rank of 25. I'm rounding up here. I'm taking the liberty to make my story a little bit better because it's not a great story. When you look at, meaning high implied volatility in Costco, when you look at Costco volatility really doesn't spike until it gets to some sort of capitulation in the market. Here it had a very big move from 780 down to around 730 or 40, and that brought volatility real high. It spiked it. But for the average, it sticks around this 30-ish level. Now we're below that at 26 or 25 right now, 24.8. But I'm going to put on a defined risk trade. So what I'm looking to do here is I'm taking all my components. I'm taking the idea that, Costco doesn't have earnings looming for the expiration cycle that I'm going to be in. So that's a big positive check. Then I look at the IV rank, a little bit of a negative check because it's not as high as I would like. And then the IVX 5-day change being up 1.5% is good, not great. Let's just call it a sideways. So you've got a sideways, a not good, a good, and then you've got a high price stock, which makes it very hard to find trades with undefined risk. So I'm going to use a trade that doesn't use a lot of buying power, but yet still has a high probability of success, and also doesn't use a lot of buying power. Now, what am I going to look to do here? I'm going to go omnidirectional, slightly bullish. The correlation in Costco is around 0.40. Decent correlation to the market, not as high as like you would say like an IWM might have a 0.85 or 90 correlation. Costco has a 0.40 correlation, but it's been one of the high flyers, which has sold off significantly over the last month or so. So I'm going to try to catch a little bit of a falling knife in a star stock of the past. So Costco, defined risk trade. I'm going to go with a little bit of an omnidirectional bullish trade that does not use a lot of buying power and has some great numbers behind it on a win versus reward basis. Let me show you what I'm doing. I'm going to buy one of the 90 puts, that's the 690 puts, and I'm going to sell two of the 685 puts. Then I'm going to go and I'm going to buy one of the 170 puts. Now, normally if I'm doing a $5 wide, I like to go $10 wide with my risk. That would be $6.85 to $6.75. But you notice I only can collect around $1.72. I like to collect closer to a $1.50, $1.60, $1.70 on all of these kind of ratio spreads that I use. So let's go through the numbers that the computer gives you, and then let me give you my little synopsis on this overall trade. It has a good 77% pop. I was able to do the trade at $1.55 credit when the stock was a little bit lower than this. So I'm buying one of the 690s, selling two of the 685s, and buying one of the 670s. It has a pop of 77%. That's the probability of profit. About $2.50, $2.25 in theta decay. It has a little bit of long delta, 5 bullish deltas. I said I wanted to be omnidirectional, slightly bullish, so this is definitely a bullish trade with 5 deltas. My max profit, $655. Why? Because this 690, 685 put spread could be worth $5 at expiration if the stock were to pin 685 in 38 days. Now, that's unreasonable. I'm not going to play for that. What I'm going to be looking to make on this overall trade is around $1 or so on the overall trade, which I would need the stock to go slightly higher or meander around and go lower, but slowly go lower, not fast go lower. My maximum loss is $845, and my buying power effect is $845 because that's my max loss. Now let's figure out how they figured out that max loss. I just told you a moment ago that the 690, 685 put spread that I'm long one time, remember I'm long one of the 690s, short one of the 685s, that's all we're looking at right now. That could be worth $5. That's why my break even is closer to this 680 number. I'm also collecting $1.55 when you look at all 3 legs. So that break even is going to be $1.55 below the width of the $10 that I have in risk. That's the 670, 680. Now I got filled at $1.55 here. If you go to these quick little lines here and go down to the follow page, if you're watching this on YouTube or later on the Tasty Live platform, you'll see this posted there. But what I'm really looking at here, what I want you to look at, is go to the follow page and you'll see I made this trade at 6:07 this morning when the stock is now 710.50. It was around $1 lower than this. So if you're watching this video and you see the stock lower than 709.50, you probably can get filled better than I did at $1.55. I put a little description in here. This is a broken wing butterfly because I have more risk than the 2 legs that I'm buying. So it is a neutral to bullish on a high price stock. I think you have to on high price stocks, and that's not my market opinion that it's a high price stock. $710 is just a high price stock. That's what I'm talking about there. Now, I get a lot of feedback, whether it be on YouTube when you write in, and I appreciate all the things that you say there and all the questions you have. Why do a broken wing butterfly, or why do a ratio spread or an omnidirectional trade, whatever you want to call it, it's the same exact thing, when you could just sell a put spread? So let's look at the put spread. Remember, I'm selling this for $1.55, and my max profit on this is $6.55. Let's look at what we could sell a put spread for, and which put spread would I sell. I would look to sell the 680, 670 put spread because that's where my risk is, or my break even is going to be the same. Let's take a look at what I could get for that. So I sell the 680, I buy the 670. My probability of profit is basically the same. The credit that I'm receiving is about 10 or 15 cents higher than my broken wing butterfly I was doing. So far it's a positive for just selling the put spread. My theta decay, $2, around the same. My delta, around the same, 5. My max profit's only $165 versus the $600 in change, and my buying power is exactly the same. So what am I giving up? I'm giving up 10 or 15 cents to have this spread move a lot slower than just a short put spread. So for me, that makes the broken wing butterfly, for the 15 cents that I'm giving up, a more advantageous trade than just the short put spread. Well, I hope you enjoyed this, and I hope you transfer your account to Tasty Trade, because that's how we get to keep the lights on here, and I get to bring you all this great free content on Tasty Live.